This is Back Roads of Illinois server to farmers and ranchers in central Illinois and the Midwest on KSIR in Fort Morgan, Colorado. I am Cesar Delgado. Corn is king. New acreage report is bullish on corn. Beans are looking uncertainty with China trading in limbo. We were joining with Jonh Heinburg from Total Farm Marketing. This is Back Roads of Illinois server to farmers and ranchers in central Illinois and the Midwest on KSIR in Fort Morgan, Colorado. Corn is king. New acreage report is bullish on corn. Beans are looking uncertainty with China trading in limbo. We were joining with Jonh Heinburg from Total Farm Marketing. John, how are you? And of course, the Brewers.
I am doing fine. It's been a while. Hope you had a great trip. Yeah, talk about those Brewers. You talked to me during the first week of the season. I was feeling pretty good about them. I mean, then we proceeded to lose six straight. At least we still got a better record than the Cubs, which is not saying much at this time for both of them. All right, so let's get into this.
John, corn is king again because the acreage report is bullish at 96 million acres. But what is the fundamentals trends in the corn markets, especially with the biofuel demand and fertilizer outage?
Yeah, let's look at that whole market in general. Now, it was bullish because of due to last year, but actually that 96 million was a little bit above expectations. So that hasn't exactly, propelled the market higher. In fact, since that acre report come off, the corn market has been kind of falling off a little bit here. And then the biggest number I think in that report that day was the grain stocks number being up 900 million bushels over last year. So there's just a lot of corn out there, and that's some of the reason we've seen corn decouple from crude oil and fall back here. Now we did a little bounce this week. Not a great close here on Thursday, so we'll see how we finish out the week in that regard. And some of the biggest reason I think we've seen pressure is that large supply picture. Even though demand is really good, this is a supply picture that affects the entire globe. We got Argentina just raised their corn crop to a record harvest. They are in the harvest window right now, just getting started. You got Brazil looking at a monster crop, not as big as last year, but a pretty solid crop. Weather-wise, they're in good shape, not great shape, but majority of the crop's going to be in good shape. And all that's going to be coming to marketplace here in the next 3, 4, 5 months. And that's going to be competing with that big pile of old crop corn that we're still sitting on. So we saw this last year, and actually last year we had a good demand pace, but a much tighter carryout at 1.5 billion bushels. The corn market just never found any legs here after the month of April and May. A little fearful that March high that we got in from the breakout of the Iran war may be that high that we're going to be dealing with here for quite a while. So we'll have to watch. Obviously, we got a long way to go. We got spring planting going here. We got some wetness causing some disruptions right now, not delays, but disruptions. As we're still just getting into the planting window. And we got a demand pace that is still aggressively strong, solid export sales numbers today. But with that, the last little piece I'm concerned about, at least in terms of the core market, is the managed money and the funds. They bought a lot of corn when this war broke off. They jumped on it for the inflation trade due to the higher crude oil. They jumped on it for the momentum trade in that regard. And realistically, last week we took all that war premium out, and they've been walking away from those long positions. So the question in my mind is, how much do they walk away from here? So again, lots of things to work on, but at this time frame, core market looks a little bit defensive. We'll have to see how the week closes after the bounce yesterday and today's softness on the close. And then obviously the wheat market's a big factor. And nice day again today in that KC wheat as we continue to see struggles in that crop with the dryness. So, and then we got the last piece that's part of your question. What's going on with the fertilizer situation? There's a lot of unclarity right now. Secretary Rollins says 80% of fertilizer needs are covered. And then you got Farm Bureau coming out with a number saying 60% or 70% of producers, don't have the money to cover the fertilizer needs. Then you had a gentleman on CNBC wrote an article too saying 60% of the people don't have the money to meet fertilizer needs. Actually, I had one of my clients kind of bring it up to me today. He's like, I've got my needs covered, but I'm borrowing money to do it. So yeah, I don't have the money to cover my fertilizer needs, even though my fertilizer is coming. So it's going to be something that'll shake out. And how does that play out in acres? We may not know that until we get to the fall and the harvest window in terms of how that fertilizer situation works out.
Do you have any concerns about these issues for right now with fertilizer in the Middle East? Should
Very
we
much
talk
so.
about a shortage of
Oops.
fertilizer for next year? Farmers just lock in the fertilizer space.
Yeah, as you were just, I kind of touched on it briefly, but we can go into it a little bit more in depthly. Obviously, spring fertilizer for most regions, or at least some regions, are fairly well met their needs as long as they booked ahead and got things covered. But there's going to be a portion out there that does not, and so that could change some things on a regional basis, But my question is to that, if we go ahead and shift another million acres or 2 million acres off that 96 million back over to beans or something else, that's going to be way too much, especially in the bean market. Already looking at a potential carryover with the bump in acres up to maybe a 400 million bushel carryover next year. So that's a concern for me. There is, yeah, we might have less corn, but the bean pile could get pretty big quickly, especially given the size of that Brazilian crop, which was just raised the other day to a record 179.5 million metric tons by
Mhm.
CONAB. Now, where it could be a better, longer term story, we'll have to see how long things continue to fall apart or the issues are in the Middle East, as well as just general in terms of fertilizer movement. This may be more of a factor for next fall's Brazil crop, planting crops for 27 or 26, 27 here for the United, or 26, 27, 28 for the US, old, new corn in that regard. Because if the fertilizer market stays extremely high or supply stay tight, the Brazilian producer is not going to have the corn they need, the fertilizer they need for corn and soybeans next fall's planting window, as well as wheat, and then that could also carry over for us going into next spring as well. So I don't think this game's going to end quickly in terms of the fertilizer side of it. It's just going to be one of them headlines that's out there, and we'll have to see how it continues to play out as we go through 26 into 27.
Of course, wait and see. We can do for now with the corn acreage on June.
It's going to be interesting to see how the corn acreage comes out on the June report. You know, the first thing about that prospective planning report that came out at the end of March, there was only a 37% return rate on surveys. And I get there's that disconnect right now between producers and the USDA. Maybe that lack of trust, obviously is out there, but so those numbers are very, very inaccurate at this time frame. And that report is a very inaccurate report, as we found out last year with the massive jump in corn acres, as we got into the summer months and finally got the FSA data getting put together. So we'll have to see how that comes into play. One little wrinkle, though, that's still in this corn market, I still think is a piece that could keep acres somewhat inflated, is the money that's in the insurance programs. Have talked to some producers, and they may cut back on fertilizer.
What are the fundamentals trends in the feeder and deferred contract with the economy in general?
Well, the cattle market right now has had itself one heck of a run, bit of a profit-taking day today. So not sure if that's just we've been seeing this a lot lately. We get to Thursday, they want to trigger some cash trade. Market sells off strongly. Cash trade comes in a little lower than the market thinks because of the panic type mode. But with that, the fundamentals are still supportive. Now we do have cattle on feed tomorrow, so that was probably another reason that we saw some pullback today, maybe some position squaring. As obviously we've been pretty overextended to the long side here in this window. Throw in the fact there's some talk about what's going to happen with the feeder cattle situation with Mexico and that border opening. Secretary Rollins is going to be meeting with Texas Senator tomorrow and the ag commissioner from Texas tomorrow. Be going through some of those conversations. And then right on the flip side of that, you get a headline that new cases were found only 70 to 90 miles away from the Texas border of that New World screwworm. So, but that is one of those things. Not sure how much impact. I mean, it'll have impact, but more on the sentimental side than cattle number side if that border does open up, because the Mexican industry has changed to meet that kind of current structure that's going on without those cattle coming to us. And obviously the cattle that are behind that border when this all happened, they're long gone and probably shipped to the United States in a box as processed beef. So we'll have to see how that plays out. Base fundamentals, again, still very supportive of the marketplace. Slaughter numbers are very, very light right now. That kind of has got the producers in control of the cash market, at least has the leverage there a little bit to kind of demand a little bit more price. We are seeing a little 248 trade to start the week, but we started the week a little softer last week before we pushed into the 250 window on the end of the week. So we'll have to see how that plays out. Uh, with that, same thing in the feeder market. The cash side of it also is extremely aggressive. In fact, we've seen the index rally almost over $11 this week, kind of getting self caught up what I'm hearing about in the sale barns on the cash side. So today's pullback either is the beginning of a technical break, which I don't sense because of the fundamentals, maybe a little bit more of an opportunity for a little short-term ownership if this market were to continue to move higher. But I am still cautious. I still recommend producers keep using put strategies underneath the market here, just to protect values as we continue to climb. Because again, every day except for the last couple of days, we've been putting a new contract high on those front end cattle contracts.
How is the Packers bids for this week in the north and in the south?
Yeah, Packer bids have been fairly quiet, but like I just mentioned, there's been a few 248 bids out there. We did have a little Kansas trade at 248. Asking prices are still above the 250 level from some producers. So, talking to a few guys, if they get a 248 bid, they passed on them, and they're reaching for a little bit higher. Now, Packers are a little bit short bought this week. They only bought about 40,000 head last week. Typically, like to be about 80,000 head. So they may have to come to the table a little bit more here, even though the cattle margins for the Packer are pretty tight or pretty negative right now. So we'll have to see. But at least that's the early indications. I think a lot of things will kind of be choppy until we get that cattle on feed report tomorrow, which again, we're going to continue to see tighter supplies and really watching the placement number, which could be fairly low on the historical level, and that would definitely show up on those deferred contracts October, December into 2027.
How about the hogs markets really quick?
Yeah, quickly, hog markets have been on a bit of a pullback here. In fact, I think today was our eighth consecutive day lower on the summer hog contracts. I'd like to see a little more strength today, but just didn't happen. Now, I was really hoping we get that April contract out of the way yesterday and get a little push there. I think summer hogs are still a little bit undervalued, but kind of concerned about the technical picture that maybe we bring that June contract down a little bit further, go down about the 102 areas, check that 200-day moving average. And I think we're going to start seeing some pretty good value available to us out there in the hog markets in that regard.
Finally, finally, do you have any final word on the corn estimate on June?
I think we got a lot of variables that come into play before I can make that number. I've been in the camp because of the insurance side that 96 million or 95 million acre, 96 million acre number could be still a touch low, but obviously that was before we've had the issues with fertilizer and costs and things of that nature, and now the rainfall side of it. So we're gonna have to see how that plays out. I think maybe that number could be fairly accurate, but if planning gets going well, which we better dry out for some people to do that, maybe that insurance factor comes into play and we get a few more acres out there. I don't know, a lot of question marks. And again, we won't really know until we start seeing probably some of that FSA data, unless the producer surveys really pick up and as we get ready for that June acre report.
Thanks, John. I enjoyed our conversation for today, and please be patient with these cubs. I know that they are looking good along with the brewers.
I agree totally right now. Last year's strength, which is the bullpen, has kind of been the struggle for the Brewers so far this year. So appreciate talking to you. Have yourself a great day. Caesar and everyone else out there, stay safe as we get into the planning windows.
Thanks again. This is Jonh Heinburg from Total Farm Marketing, One Back Roads of Illinois. Otherwise, you can listen to our audience on YouTube. I am Cesar Delgado. You have a good day.